Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy Live Trading Room. And this is the Seeking Alpha report that we just published in Seeking Alpha on October 7th, 2019. Gold. Prepare for the 1800 handle. The fact that the market closed at 1513 below the weekly trend momentum of 1517 means that we are coming into the week bearish. This has activated the extreme below the mean level target of 1501. Since the market closed above the average price of 1501, it activates the target above the mean of 1538 to 1562. If gold closes below the mean of 1501, it will activate a bearish trend momentum in the targets below the mean of buy 1 of 1477 to buy 2 of 1440 will be activated. Since the market closed above 1417, which was identified as the yearly average price for 2020, it activated the targets of 1655 to 1803 for the period of September 28, 2019 to September 28, 2020. For gold, the proprietary variable changing price momentum indicator, the VC PMI, weekly indicators appear to be validating the expected correction into the levels of demand that we were anticipating in our September 23rd, 2019 report. The market came down to make a low of 1465 on October the 1st, which activated the weekly buy signals and then reverted back up to the mean of 1519, which was expected as of Friday, October the 4th. This action has activated a bullish trend momentum as we come into this week. It has also confirmed a great deal of data that was expected to offer a validation of demand for gold at these levels. The market tested the extreme levels below the mean on the weekly levels at around 1482 to 1464. The price came down into what appears to be the lower level of the trend lines of support of a down or bearish flag, which is very bullish pattern. It indicates that after testing that low level of trend line support, the market has activated a buy trigger point, then reverted back up to and is testing the upper end of that trend line resistance at 1527. Next week, the fact that the market closed at 1513 below the weekly trend momentum of 1517 means that we are coming into the week with a bearish sentiment. This has activated the extreme below the mean level of target of 1501. Since the market closed above the average price of 1501, it activates the targets above the mean of 1538 to 1562. For short-term to immediate traders, if you're long the market, these are targets at which to take some money off the table. Prices between 1538 and 1562 have a 90-95% probability of a reversion occurring back to the mean of 1501. If gold closes below the mean of 1501, it will activate a bearish trend momentum, and the targets below the mean of buy 1 and buy 2, 1477 to 1440 will be activated. If the gold price comes down to below the 1501 level, excuse me, it would negate this bullish trend momentum that we appear to be moving into. If the market breaks above the upper level of 1562, which is the sell 2 on the weekly data, it would indicate that a major breakout has occurred and it would activate a higher fractal in price. Resistance at 1562 would become a support level, and we would expect much higher price levels. Equity Management Academy, Patrick MontesDeOca said. Based on our annual report, which we published in Succinct Alpha just a few weeks ago, with the market closing on September 27th at 1506.40, it has activated the bullish trend momentum for the rest of the period of 2020. Since the market closed above 1417, which was identified as the yearly average price for 2020, it activated targets of 1655 to 1803 for the period from September 28, 2019 to September 28, 2020.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our variable changing price momentum indicator, VC PMI, is an automated AI trading system developed and tested over a decade. The VC PMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VC PMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VC PMI algorithm. The VC PMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VC PMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VC PMI? The VC PMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VC PMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VC PMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.